Ladies and gentlemen, K-Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down quite a bit. As you can see here, S&P is down 2.4%. And Nasdaq is down about 3.5%. Semiconductor is down almost 6% there. Dow about 1.7%. Russell 2000 close to 4%. Everything else seems like around 2% there. Biotech also an emerging market. Grayscale got hit, down 6%. Gold and silver is down about 2% there. VIX is up about 35% with the selling pressure that we saw today. So let's dissect this price action that we saw today. We'll look at the short term, we'll look at the midterm, and see where we're at with after the price action we saw today. So it looks like, obviously, man, we saw that shenanigan yesterday, and we saw another shenanigan today to the downside. And this is something that we've kind of anticipated, which I talked about on the weekend video, that we may witness shenanigans to the upside or downside, especially when you're in a midterm uptrend, but we're also kind of extended. We talked about that in my longer term analysis video. When there's excessive bullishness, excessive optimism, market likes to throw that fear back into the market to shake some people out. I think that's kind of what we saw here today. I think today's move is mostly psychological, right? Because I think after this move we saw yesterday, I think there was a lot of people expecting this thing to get back up here. Even myself, I thought we were going to come back, continuing that, maybe even retest the short-term moving average, right? So market likes to throw in that shenanigans here and there just to throw you off, just to get people rattled a little bit. So when the market's shaking and baking like this, best way to remedy that is to go back and zoom out and look at the midterm, right? So let's do that today. And so when we look at the midterm, you get a little bit of better idea. Obviously, tomorrow's a Friday, so we'll do the weekend analysis. We'll look at the longer term sentiment of this market. But when we look at the midterm, bigger picture here, and we've seen a shenanigan like this before. That definitely looks like some kind of a shenanigan there. I don't think that wick is, I think there's a misprint there. That definitely looks like a shenanigan. This is for sure looked like a shenanigan because this right here looked like it was gonna get up next day. We gapped up and then just tanked on that day. I still remember this day. This was like, what is this? It looks like that was New Year's Eve. Or actually, right when we came back after the New Year's Eve. That's like the first day of trading in January 2021 this year. We gapped up right at in the morning. It just tanked. There was a shenanigan there, right? We can see right here. We recently witnessed that shenanigan late January. So this kind of stuff is going to happen. It's just part of the market, nothing crazy. I think anybody looking at this as some crazy move, I think if you're shorter-term traders, swing traders, are going to have a really, really hard time when the market is volatile like this, right? So in the looking at things long-term, is my midterm moving average still rising? Yes. So when my midterm moving average is still rising, I want to give benefit of the doubt to the buyers in the midterm. I am bearish in the short term because we're back below my short term moving average here. You can see that a light green bullish moving, and we're back below it. And we also have to treat this as a lower high now, right? Because we were not able to cultivate that higher low. We talked about that yesterday. We need to see that higher low. We didn't see that higher low. We actually just plunged right through. So these are lower highs in the short term with some lower lows. We definitely in a downtrend in the short term. We saw that before here. We saw something similar here, some here. So within a longer term uptrend, you will see the shorter term downtrend. That's kind of where we're at right now. But midterm moving average is rising, and my longer term moving average is still rising. So I do want to give benefit of the doubt to the buyers. For in the midterm and the long term, and that sentiment, right? That hasn't changed ever since back in early November. So I've been bullish this entire time, November, December, January, February, for 4 months. In the midterm, I've never, switched my stance from bullish to bearish. I was always bullish in the midterm. But in the short term of things, you're going to have short-term bearishness here and there, right? So let's talk about potential support level now, right? So potential support level is currently, we're hanging around right on that midterm moving average. We didn't close the day with a handsome looking candle for the bulls. We'd actually look like it's a weak looking candle. But you never know in this kind of environment what you can gather with just doing the candlestick analysis. So I wouldn't put too much weight on this. There are times where I see like some bullish, hammer candle, and the next day it just gaps right down and then nullifies it. So right now we're just right at it. So I would have to say that's a still support level right here in this vicinity. And obviously we got the gap support. That gap still open. My long-term moving average is residing at 377 here, trying to protect this gap area should the price continue to slide going into tomorrow. Keep in mind my long-term moving average on my 65-minute chart, that pink moving average does have its resume with a pretty good record here. Back in late January, we did see that V-shaped reversal. It went from 270, 367, 368 or so, all the way into 394 after hitting that longer term moving average. So we got some weight of support in that vicinity. I would have to say that if the price come back down, that level is going to act as support. Why? Because we're on a midterm uptrend. If the bears don't want to deal with this, if this market actually want to impute more fear into this market, best case scenario is gapping it down. If not tomorrow, maybe Monday, early next week, gap it below it, because there's so much support here. The entire gap area is going to act as support. Not only that, we got my long-term moving average that's going to act as support. That support is strong support. So sometimes what the market likes to do is gapping below it. That would be the best case scenario for bears. If they can gap it down, they're going to turn this into an island top, and we will see this market coming back down to challenge this gap right here at 371, even retest at 368. If not, I would have to say this level is going to act as strong support. So let's quickly recap here what we talked about in this video. I am bearish in the short term. The sentiment is bearish in the short term. We're back below my short term moving average. That's a little flop there. That's a little head fake there. That's a little shenanigan there. We still got lower highs there. As we talked about, we're still bullish though in the midterm. We're still bullish though in the longer term. So we want to give benefit of the doubt to the buyers in the midterm, in the long term. But because we're in a bearish in the short term, expect shenanigans, expect volatilities, expect gap downs, gap up and fade, gap down and reverse back up. All kinds of stuff can be happening at this moment going into tomorrow. It will be exciting. It will be interesting, right? Let's check out the oscillator here real quick. So oscillator actually did cross back down. As you can see, the oscillator is not oversold yet. We're still got room to make a move here. We're not oversold. That means bears can still push it down. Let's see how the market plays out. Let's see how the market is going to behave in this vicinity. Is this market going to gap it down, not even deal with the support, and put much more fear into this market? Or are the buyers going to step up here? Enjoy your evening. Good luck trading tomorrow.